Welcome back, everyone, to Fox Markets Live. My name is Paul Hill, and I'm delighted again to be able to speak to accomplished UK fund manager Paul Jourdan of Amati Global. So welcome, Paul.
Thank you. Great to be with you again, Paul.
Yeah, well, big happy new year. It's marvellous having you here. And certainly we've had a lot of big macro news, actually, over the last couple of weeks. We had the softer than expected CPIs. Luckily, bond yields have just touched off their highs at the back end of last week. We've also kicked off the US earnings season. We've had a deluge of trading updates up and down the high street, and sort of like the Christmas trading update. And then this afternoon we've got the inauguration of President Trump as well. So putting all that together, what's your sort of your outlook for equities for the rest of 2025?
Yeah, no, it's a kind of a slightly momentous day to be holding this interview. You know,
Yes,
I'd like to think I got a message from the White House saying, please don't have this today because we don't want the event being upstaged. It's always a big event when you hold an interview, Paul. But yes, that and the ceasefire in Israel, Gaza, it's a pretty momentous day, let's face it. And it's been, I think, a slightly rockier start to the year than people were hoping, with the bond yields rising dramatically. And it's a good reminder, I guess, that government finances have a fragility about them, and you can't carry on just borrowing money forever when you've got a very indebted nation as we have. The bond market's kind of rule the roost in a way, and it was a good reminder of that earlier in January. So clearly a lot of attention will be focused on that over the coming years. This is not a short-term quick fix kind of problem, but everyone will breathe a massive sigh of relief if the long bond comes down. Well, I suppose the one thing it did make me think in January was actually, even though the US economy and the UK economies are very divergent at the moment, and it's one of the really difficult truths that we have to kind of face in the UK is we're not keeping up with the US. Nonetheless, when the US bond yields rise, our yields rise as well. And of course, this is true in many markets, probably in every market. But that is a good reminder of how every now and then the macro comes along and does stuff that you have to pay attention to. And the first couple of weeks in January were like that. But as you say, the bond yields are backed away in the US, and that's led to a sigh of relief everywhere else. So that is one of the kind of crucial factors for the year. But on the assumption that bond yields don't come along and clobber us, which I'm hopeful they won't, but it's not something we can particularly control, and it's not even something the UK government can control to a certain degree. Then we're back in this sort of Groundhog Day. Stocks are very cheap. There's lots of reasons why the UK economy should spring back. There's a lot of private savings. There's the potential for the economy to do well. What we really just need is kind of confidence, and that is actually is about leadership. And so there's every opportunity for things to get better, and I'm certainly hopeful they will. As always, these things are not entirely in our control, so you have to kind of plan for the worst and hope for the best as an investor. But this is quite an extreme point in terms of valuations and valuation divergence against the kind of opportunities that are out there.
Yeah. Well, I think this afternoon we're going to get a blitz of White House executive orders coming through from Donald Trump, one of them being trade tariffs, and whether we get retaliatory action from the likes of Mexico, China, maybe even the EU and Canada. But on the other side of the ledger, we might actually get, in the first couple of months, a sort of like a ceasefire in Ukraine and Russia, because both sides seem to be wanting Trump to basically act as that catalyst to stop the war. Does that change at all, or is it basically they're equal and opposite?
I mean, it would be so fantastic to see a proper resolution in Ukraine, and can we be optimistic about it? I mean, I don't know. I mean, let's see. You've got to respect what the Ukrainians think about it, really, and I'll sort of, my own thinking will be led a lot by what they say, and everybody knows this war needs to stop. It can only stop if the Russians stop it. So what are the conditions under which that can happen? Well, we're going to find out, I guess. I mean, I think Trump himself, having said he can fix it in a day, has backed away from that position, said, oh no, this is a bit more complicated than that. I guess later on today, I mean, it is going to be interesting because we are very quickly going to get a feel for the kind of thing that's going to come down the track. And, you and I probably both remember very well the sense in between 2016 and the following 4 years of just confusion. You come in and there's this unbelievable headline that everybody knows will be a total disaster. And then, of course, it doesn't really happen that way. And so I suppose a lot of Trump supporters who you hear talking will understand what he's saying in just a very non-literal way. But this is very difficult for financial markets to deal with. We're quite literal people. And if somebody says something's going to happen, we sort of expect that it might. But we're into a world now where it's all about second guessing. And is that statement for real? Are these tariffs going to be for real? Is he really going to put 25% on Canada and Mexico? It just feels incredibly unlikely. But so we're into this world of second guessing and almost double think, really, about what's really going to happen. It does make investing pretty difficult. The markets often just, you see a headline, we know the markets are going to respond. So therefore, that if it goes the wrong way, you have to kind of take account of it, even if you think it's not going to happen. Yeah. Because the share prices are going to move on the back of some pretty wild statements. So, we're pretty quick to get a feel. And also just in terms of which factions within the MAGA camp are actually going to dominate. They're very, very different factions around, and which ones actually have the ear of the king, you might say, and to use the kind of court analogy, which is being talked about quite a lot. We don't know yet, but my guess would be probably Elon Musk is going to be pretty powerfully influential.
Yes.
For the simple reason that he holds a massive key to power, which is this, the social media company, which is X, which is, these things are just weapons of political mass destruction, and he holds the key to one of them. So, Trump is not going to. There's been a lot of speculation like, they're just going to fall out. Personally, I don't think that's the way it's going to go because he's too powerful, so I think Trump has got the political nous to keep him in the tent. But we'll see. I'm not saying any of this pretending to be a US expert. I just read the papers and form a view. But we know it's going to be a bit of a wild ride, that's for sure.
Yeah, it's an amazing situation, isn't it? It's sort of a bit like when Tony Blair was in power. He would have the equivalent would be inviting Rupert Murdoch onto his cabinet, into the Chancellor, to have that level of power. But anyway, let's start to run through some stocks. If anybody wants to ask Paul any questions, please put in the chat button. I've already got one. We'll cover that later on. Let's go to healthcare first of all. A really good stock, actually. Let's go to Diaceutics, which basically is an expert in all things diagnostic and testing for new drugs coming through, particularly on sort of precision medicine, etc. Helps big pharma commercialize their drugs and accelerate that commercialization process. How are you seeing this one? The shares have done pretty well, actually.
Yeah, and fantastic to see the shares. Any company whose shares are doing well in this environment, you have to pay attention, because this is a very, very tough environment for companies like every company of this kind of size and this stage of development. So this is something quite special going on here. And actually, one thing I have to say about Diaceutics is it's one of Northern Ireland's real success stories, and that's one of the things I love about it. There are many things to like about it, but that's one of them. We invested in this from the VC at float, so I've known this business for quite a while. One of my colleagues now covers it in more detail than I do, but I'm very, very pleased to see the way they've adapted their business plan to find the opportunity that their particular business assets can meet. And so they started with an idea that was actually a little bit difficult to grasp. So it's one where it was obvious that there are a lot of new drugs coming down the pipeline that required specialist diagnostics in order to be prescribed. And so this is the era of bespoke, bespoke drugs almost, where this drug if you got this genetic profile, that drug if you have this marker, and so on. So treatments are getting very specific and targeted to quite complicated sets of circumstances. And Diaceutics recognize this, and so they built this set of relationships with diagnostic laboratories across the major pharmaceutical markets, and that's put them in a position to help the pharmaceuticals deal with a situation where they launched this great drug, and it's not being prescribed because the right diagnostics are not being done, or the labs haven't really kind of quite picked up the right way of dealing with the new drug opportunity. And so in a sense, that then creates this service proposition where Diaceutics can boost the sales of these new drugs really significantly by overcoming the barriers to adoption in the laboratories.
Yeah.
And actually, it looks like this is quite a valuable opportunity. And it's just very pleasing to see Diaceutics, it's still in the early foothills of this, but it looks like they've actually really focused the business in a very promising way, and they're starting to get some really good traction from the major pharma companies.
Yeah, it seems to be a win-win for everybody, doesn't it? It's a wins for the biopharma because they commercialize their drugs, which they can sell at really high margins faster. It's a win for the diagnostic centers because they get more volume going through. It's a win for the patients because they get treated better when they have sort of, with a better sort of like tailored disease. And it's obviously a win for Diaceutics. So I know it sounds blindingly obvious, but actually surprisingly.
Yes, I know, from that old sort of Charlie Munger feature is, you want to invest in win-win businesses. I mean, absolutely. This is a classic case for that. Yeah.
Okay, good. Let's switch to another one in that sector. We've got Creo Medical, which basically does electrosurgical devices, largely keyhole stuff. And they've got this really big contract, or potential contract, with Intuitive Surgical, the maker of the Da Vinci machines, to stick onto the end of their robotics, etc. Largely for really quite coming for sort of cancer procedures like lung, which you can then take a biopsy, and if it is, you can test the biopsy at the time when you're doing the keyhole surgery, and if it is cancerous, you can then take out the lung, which means that it's less damaging for the patient. How do you see this one? This one now seems to be turning, so I know it sold as a division, it seems to be cashed up.
Yeah, I mean, Creo is a classic kind of case in point of the kind of thing the market just can't really deal with at the moment, and it's a bit of a tragedy.
Yeah,
I mean, it's an astonishingly promising company where these products are truly revolutionary surgical instruments, and there's the inventor of these products was behind Gyrus, which the more mature investors watching this will remember was a great success story. Got acquired in the US, was all about keyhole surgery and powered surgical tools for cutting and cauterizing wounds. And this is the next stage of that, where you do it through an endoscope, non-invasively, and it's opened up this really incredible possibility of treating bowel cancer, lung cancer, pancreatic cancer, I presume esophageal cancer, without actually having to cut anyone open. You just non-invasive 20-minute outpatient procedure from replacing what was these are some of the largest, most horrible operations to go through. That bowel cancer operations, esophageal cancer. These leave you in a pretty awful state for years afterwards. And actually, the idea you can change that into a 20-minute outpatient procedure and have it done every 6 months if you need to. This is revolutionary. Yeah. So in that sense, it's it's a great expression of what's brilliant about the UK in a way. And we produced this company. And then on the other hand, what's so painful is that you then kind of meet the sort of incredible kind of quagmire of actually getting your product used. You've obviously got to train doctors, and it's very incredible. You have to spend unbelievable amounts of money in commercial development, and years go by, and you still haven't really got meaningful sales. And then Intuitive have come along and actually changed the game completely by making this a robotic procedure. And there isn't really an alternative for Intuitive to use in this. The product market fit for Creo's product in that case is phenomenal. And they've just started doing the first lung cancer treatments. That was announced last week with a robot, and this is opening up, phenomenal areas of better ways of treating horrible cancers, and in some ways non-treatable cancers, or where the surgery would just overwhelm you in the end if you have it too often. This non-invasive approach means it's just not a big deal when you can have it multiple times and it's going to be fine. So I think all the investors in Creo are kind of thinking, well, how long do we have to wait, and when's this all really going to get going? Is there another fundraise? I don't think there is. We're on the cusp of some news, which is quite important, about the regulatory approval for the sale of one of their distribution subsidiaries to selling 50% to the Chinese, and that's going to raise money that should be the last bit of money they need for commercial development. And then the Intuitive program should kick in. in any normal set of former years, the idea that a UK company would be pioneering this new treatment for lung cancer, people will be getting very, very excited about it. But right now, it's not of any relevance because it's not cash flow tomorrow. This is about kind of major innovation, and it's a very interesting company, and I continue to desperately want to see this succeed. Actually, I was just walking down the road the other day, and one of my neighbours said, "Oh, I'm about to go in for a bowel cancer operation." I didn't even know what to say because I know that's not going to be a Creo Medical bowel cancer operation.
Yeah,
it's going to be a terrible, massive, very invasive thing, and it's not necessary.
Yeah. Well, I mean, if the sort of trial procedures that they're currently doing with Intuitive in the UK, if they are a success, and they've only done a small number, but once they've learned and they can then repeat that around the world, then I mean, it looks like a perfect acquisition for Intuitive, would be my honest.
I mean, the great, unfortunately, the outlook for that is probably it's just going to get acquired for way too much money. And, people like me will be thinking, oh, crumbs, is that really the best we can do? But anyway.
But it'll probably get bought out at about £1. Okay, last one, but a bit smaller, is IXICO, which is basically an expert in MRI scans, well, brain scans anyway. It helps a lot of the big biopharma develop neurological treatments for Huntington's, Parkinson's, and Alzheimer's. And they've got sort of like contextual databases and AI programs. They did a fundraise, I think about 3 or 4 months ago, at about 9.5p. Shares have ticked up and they've won some contracts. Order books increased by about 20-odd%. How do you see this one going forward?
Yeah, I think it's interesting. As you know, there was a change of management earlier in the year.
Yes.
And actually, I think it's kind of brought in a new energy to the company. So the strategic kind of challenge that they'd had and hadn't really managed to kind of address properly was they're very, very highly regarded in Huntington's disease, and they need to expand their field of business really to cover Parkinson's and Alzheimer's, and so really that sort of business opportunity expansion is what the new CEO is very focused on, and the fundraise, which had looked pretty difficult before, actually was oversubscribed, and they were ended up genuinely turning money away. They said, no, actually, this is all we need, and it's been winning some contracts. It's starting to, if we can prove that strategy, then we get to a pretty good point with this. So, I think there's a good opportunity here. It's very highly regarded in its area, and it should be able to translate that to these two adjacent diseases. Yeah.
No, I understand also their break-even revenues are about 8.5 million, and they're hoping to get that over the next sort of 12 to 18 months. So if that happens, then that should be quite sort of transformative. We've got a question coming in from Ben Sharman. He's asking about just general thoughts on the building supplier industry, and he says you may hold Brickability, or one of your colleagues might hold Brickability, but just general thoughts, because the housing market now, we've had the house builders last week, they're all saying they're starting to break ground, and then I guess it really depends on where you are in that house building suppliers or products process, decide when you're going to get that effect, the ramifications. But what are your thoughts?
Yeah, we do hold Brickability, and it's one of my colleagues who covers it in detail. But I mean, broadly, everybody in the country knows we're not building enough houses, right? And there's a chronic shortage, and we need to build more. And we've got a government who's seems very focused on unblocking some of the things that are stopping this from happening. It feels like it's a matter of time. I mean, obviously, the bond yields rising was another hiatus, because the construction market in the UK is very long-term, 5-year interest rate sensitive, and the 5-year rate jumping up was deeply unhelpful. It's come back down. If that stays down, then actually I'd be pretty optimistic about construction activity picking up.
Yeah, I think the valuations are absolutely battered as well. So you're picking them at cyclical lows.
Yeah, absolutely. Yeah,
certainly one for the brave if you want to sort of go through that whole sector. Okay, let's move to another sector that hopefully should get a bit of stimulus from the Labour government, and maybe also from the Trump over in the States is the rail sector. And let's look at the sort of the poster child of all things sort of software and hardware in the UK is Tracsis, that had a profit warning because of the general election was brought forward, had a stumble, and now seems to be back to normal. The share price actually has just kept on falling. How do you see this one? Good quality business, sort of 13.5 times PE, plenty of cash as well.
Yeah, I mean, yeah, there seems to be a big disconnect. So then you start asking, well, what's the market really worrying about? I think over the weekend there was some chat about government further delaying rail expenditure. Is that going to affect Tracsis, which is really an OPEX kind of business more than a CapEx business?
Yeah,
and it's CapEx that's going to be deferred. And I guess it's reflective of having a new government come in who are, let's face it, through no fault of their own, very inexperienced, and they're starting to. The more you kind of chop and change your mind about things, we're going to review this, we're going to review that. Well, that's all great. Maybe you make better decisions, but on the other hand, you've got a load of businesses out there that have absolutely geared up to deliver what you want. This is not about Tracsis. This is about the rail sector more generally. And then you just suddenly let them all down, and you assume then that they're going to be there when you want them, which is actually not that safe an assumption when you start to kind of really disrupt an industry by just disappointing it. It's expensive to do that. So I'm not on top of the detail of exactly what's going on with this, but if there was another big delay to the rail capex cycle, that's not a good thing for the industry. It's not a good thing for the rail industry at all. And in the long run, it can become quite disabling. But the strengths of Tracsis are it's got great software. It's invested in some really interesting ticketing technology, which is not going to be caught up in any of that capex that I was just talking about. That it's pretty clear that the way ticketing works is going to change, and what Tracsis have led the development on is what they call geofenced ticketing. So you can basically get on a train. I think this is the way you're going to work. It'll be a bit like you don't necessarily need to tap in and tap out, because your app on your phone will know when you've been on the journey, and it will charge you for it, and it will know how many you've been on. So in a place like Scotland, where we have lots of small stations with no barriers, you can use geofencing to avoid the whole ticketing problem. You just know when your customer's been on the journey, and if you go on 5 journeys, then you get charged the 5 journey rate. If you go on 1 journey, you get charged the 1 journey rate. It doesn't work on long distance where you got completely different kind of ticket pricing. But it creates a kind of oyster-like system for regional networks, and that can form the kind of backbone of quite an interesting ticketing development, which should happen. It looks very sensible to me. So there's actually that could turn into a really interesting aspect of Traxis's business. And obviously there was what's going on in the US with Tracsis, which is obviously completely separate. But that's where they slightly failed to deliver last year. We need to see that kind of turn around and come good this year, which I hope it will.
Yeah, well, I would have thought Trump, if he goes for his MAGA strategies and boosts US GDP, then there's going to be more things shipping and going over the rail tracks. So, and in the UK, we definitely need the benefits of efficiencies and digitisation in the rail. Just get them working. Okay, right. Another one in that sector, a bit smaller, Point Solution, is Cordel. They basically do LiDAR, sort of like surveillance technology with AI built in to do track maintenance. They stick it in front of sort of like Pendolino trains even, but to look at what's in, whether the track is needs repair or also there's vegetation stuff. Like really interesting technology, actually. It is obviously a single point solution, though, I think.
Well, it's a company with maybe one product, if that's what you mean by
that's what I meant. Yeah, one product. Yeah,
I mean, indeed, yeah, but it's being adopted on a very sort of wide range of geographies.
Yeah,
and I suppose what attracted our attention to Cordel was the way they were winning contracts with really massive rail companies, whether it's Amtrak in the US and Network Rail in the UK, and it's also a proposition where you just think actually intuitively this has to happen. Yes. So instead of running at night maybe, or having very quiet time, running a specialist sort of very slow engineering train down the track to kind of use cameras to identify, or maybe people to identify where the problems might be on the line or the vegetation. You just put the LiDAR on a full speed train, and you can then run it as often as you like. So you get much more real time. You're not disrupting the train traffic by running a slow vehicle, and you're much more accurately able to identify when problems are occurring and where they are. So it's a very it's not difficult to understand why that should be a great product, and it is gaining traction. So and it's a multi-year commercialization, but I'd say it's looking pretty good at the moment.
Yeah, I would say another one for the M&A in terms of Tracsis come on down would be look a perfect addition. But anyway,
yeah, I think that you're absolutely right.
Yeah. Okay, let's move to another sort of digital software stock. This time in flexible offices, prop tech. We've got essensys. I know we've talked about this some time ago, but it seems to have quite let me just take that off. It seems to have quite a sort of unique solution. Sort of helps landlords manage the space of sort of like a flexible workspaces. So essentially, if a company wants to do a mix of permanent office space and sort of temporary, so a bit of work from home and a bit coming into offices, these guys are the best ones for it. That market now seems to have turned, which is, look, thank God. I think they've got the biggest part of the businesses out in the States with large landlords, people like CBRE, Industrious, and all these kind of guys. I think they're just about to reach EBITDA positive. How do you see this one? The shares actually have just started to pick up, actually.
Yeah, I think it's at a really interesting moment. And again, it's one that's been properly kind of binned by the stock market and been through difficult times. They did make mistakes. They wasted a lot of money trying to expand in Asia, spent a lot of money in Hong Kong, had to retrench. They basically overspent, having floated on AIM and raised a big chunk of money. And then it looked like they might run out of money. Now that doesn't look like the case anymore. The CEO and founder, to his credit, really kind of hunkered down, cut the costs as they needed to. You and I often talk about business needing to cut costs. Well, essensys did do that, and but most importantly, they spent 2-3 years redesigning their product. And the reason why it's interesting is because they have, in the last few months, just launched what is a really very interesting sounding updated version of the new product they've been designing for a couple of years. And I think it's to me sounds like this could really gain traction. It's a new improved version. It's got lots of new features to it. And as you say, this is only for the landlords who are turning big office blocks into shared spaces. But this is a very strong trend in commercial real estate. That the move towards shared office. You don't no one person is going to rent a kind of 50-story office block or whatever it is, or 10. You divide it up and you have multi-tenants, and then you've got some shared spaces. And essensys, it gives you just a fantastic tool for managing all of that and actually then maximizing your revenue and charging for the shared spaces as you should, because it just brings that sort of full level of automation and control and visibility over what's going on. So some really interesting new features in the product. I think for people who are interested in it, definitely worth doing the work on and catching up with them.
Yeah, that new module, I think, is the intelligence engine you're talking about, which is basically taking all the data from all their landlords and then using it out benchmarking to improve utilization and revenues per square foot, and helping their clients and their landlords around the world to maximize the revenues they get.
Yeah, integrating with Apple Pay and making it very easy for your mobile phone to book a space and pay for it, and just taking the friction out of managing shared spaces, so it becomes a lot easier.
Yeah. Another fallen angel that seems to be on the turn is Water Intelligence, which basically is an expert in all things leak detection and repair, largely in a franchise business out in the States, but has also got some interest out in the UK, which particularly helps sort of utilities with their stormwater treatment and runoff of sewage into reservoirs and stuff. Their shares likewise seem to be just ticking up of late. I don't know whether you got any latest thoughts on this one.
I mean, we talked about this one before, and I don't think anything profound has changed. I mean, the company is doing well, and leaks are not going out of fashion anytime soon, are they? They keep happening.
Not in my house, anyway.
No, mine neither. So it's a very solid core to this business. I think with a couple of tweaks to their corporate governance arrangements, they'd find a much bigger audience in the UK. But it's done a lot of the right things in terms of getting the growth, bringing some franchises in house when they need to. Business development wise, it's been good, and it's an interesting company. It had fallen a long way, as you say.
Yeah, it's still cheap actually. I think it's on about 11.5 times PE for 2025. So for a business with secular growth drivers of water conservation and lower costs and invasive leak detection and all that kind of stuff, then it should be in a decent position. Okay, we've got a follow-up question. So Varan Kapoor, he's asking about just private health providers in general, and the link up with NHS and Spire Healthcare. I don't know whether you had a look at Spire ever at all. You don't own it, I guess.
We have had a look at it. We don't own it, but it's one of my colleagues who looked at it. I mean, I think it's interesting. I suppose on the plus side, it makes a great deal of sense for the NHS to expand its services by engaging the likes of Spire and bringing in private contractors to, do jobs that can be, just about repetition and doing lots of them. And this has been a debate sort of raging in the UK for a long, long time. Came back to Alan Milburn, who brought this kind of thing in really effectively early in the 2000s, and then it sort of, there's a political backlash, and the whole problem with the NHS is it's very, very difficult for commercial companies to engage with it because there's such a kind of anti-profit mentality, and as soon as you bring a profit motive into UK healthcare, you're always in danger of somebody just politicizing it and saying, "Oh, this is deeply unethical," even if you're doing it in a way that saves the taxpayer money. Makes sense. I always worry that there's that risk, and it's something that we need to come to terms with as a country, effectively. And hopefully we will. And in which case, I don't know the detail of Spire's set of circumstances, but I'm sure there'll be some very good opportunities for them.
No, it's bizarre, really, because we seem to operate a double standard in the NHS, because we're happy for people to put equipment and to sell drugs into the NHS, but with services, it's sort of like, okay, it's a political issue. I mean, what's the difference? I'm sorry, they're both supplying in. Okay, one thing I love speaking to you, Paul, is that we always come up with lots of stocks that I never talk to anybody else. And another one here, we've got Windar Photonics, which I think basically does sort of like LiDAR, sort of like helping wind farms in sort of like offshore and onshore and stuff to improve the efficiency and productivity of them. But what's the story? What's the investment thesis behind Windar Photonics?
I mean, it's interesting. Windar's, again, it's been around for quite a few years, and really, really interesting looking technology. So it uses LiDAR to basically detect wind flows and make sure that the angle of the turbine is the optimal angle for the wind. And it turns out this is just a very, very effective tool for doing that. And you can retrofit it onto a wind farm, and you get an immediate uplift in your production of electricity. So that makes a great deal of sense. And like all these things, every new technology, it's a long and painful road to commercialization. But earlier in 24, we were looking at this thinking, well, actually, this company is really starting to get this going. And so we having looked at it a few times for the VC, we made an investment earlier in 24, and actually we made another one just recently. And they ended up with a contract delay. So what looked like a really stellar 24 turned out into just a good 24. But this feels like it's starting to unfold, and that there's a big opportunity for them. As with any new technology, you've got to get the reputation in the industry, you've got to get the adoption, you need the early adopters, you need the distribution, and it's starting to come into place. So there's some big opportunities for Windar. So it's one we're pretty keen on.
They make massive margins as well. I was just looking at the forward expectations for EBIT margins of over 30%, and they're only trading at about 13.5 times. So for a high value type of specialist business, it seems to be quite attractively priced, actually.
So, and if they get this kind of scale that they hope they will, then yes, it should become very profitable.
Yeah. Okay, good. Let's move to another one which has had a very good reputation but slipped up recently. Is Solid State, which does sort of like rugged electronics for all things really tough and high performance applications, maybe defense, aerospace, space, whatever it is. Anything where you need really tough and durable electronics, these guys are the ones, the sort of one-stop shop for it. But they got hit last year, or just the last 6 months ago, by the deferred sort of defence review. How do you see this one going forward? Very popular share.
Yeah, I mean, look, we really like this business. It's it's a great UK specialist electronics business. This should be the kind of thing that we really excel at in this country.
Yes.
And then it's just kind of ironic that it's just a bit like I was talking about in rail a little while ago. They won this really significant contract for NATO for communications equipment, which desperately needs updating. So secure communications for NATO forces, and then just completely undermined by the government saying, "Oh well, actually, we know we gave you this contract, but we're going to put it all on hold because we're just having another think." They can't just leave these people with no communications devices. I mean, they're using really antiquated technology. It shouldn't require that much thought. And I've been thinking a lot about these kind of cases where I've kind of come to the conclusion that what we so badly need in the public sector in the UK are just top procurement people. And somehow or other, whenever you see a kind of big government procurement program, you always kind of groan inwardly because you think, oh, well, you just kind of know they're going to make a mess of it.
Yeah.
And the way you solve, you don't need armies of advisors, and this is where it goes wrong actually, because they go out and they bring in one of the big four consultants and make a massive meal of the procurement, and then inevitably they're going to screw it up.
Yeah.
And they'll buy the wrong thing for too much money. What you need is one really top procurement person who knows exactly what they're doing, and they would get this right in much shorter space of time. You wouldn't need massive reviews because you just say, well, look, this is you need to buy this now. This is the right price. This is the right product. But you just want that sense of people who just know what they're doing. This isn't about the politicians even. This is actually about the officials who run this stuff. Yeah. But anyway, it was a bit of a tragedy. The company's convinced the contract is just a delay, and this contract's still going to happen. Market obviously never believes that kind of thing, so it's sort of a show me situation. We'll believe it when we see it. We kind of think it will happen because the product is absolutely needed, and the people in the field who are going to use this are, must be just desperate to think, what the hell is going on? Why are you not giving us what we need? And you'd have thought that there's a kind of irony here that where defence should be such a strong theme at the moment, because clearly we need to be spending on defence equipment right now, and this was anyway, it was just ironic that this was the thing that upset this business. It shouldn't have happened, but it did. I think it's a delay, in which case it will turn out to be just an unfortunate episode, and the company will get its act together. We get things back on track when that contract comes back. If it doesn't, well, that's a big shock to everybody. Yeah. But we think it will.
Yeah, no, it's amazing, isn't it? Really, I mean, regardless of whether it's red or blue in Whitehall, the government's got an embellished reputation in poor procurement and terrible capital allocation through decades. It's just, I mean, the private sector is not brilliant at times, but the public sector is atrocious. But anyway,
the classic case in that point was with big technologies who failed to win the UK national tagging contract, and now within months it was a total disaster what they bought, and they changed the monitoring from Capita to Serco. They still use G4S. These companies have got histories of lying to the government over these contracts, and now the Home Secretary is tearing her hair out saying, "Well, I've been lied to over this. It's not work. Why are you not doing what you said you would?" And it's that was classic procurement exercise. PwC, I think, were involved in buying it, and maybe not them, but one of the consultants. And they structured the contract so they couldn't buy the right stuff, and they were looking at the wrong things. They wouldn't actually acknowledge any of the ways that big technologies, much better technology, would save them money. And because they ignored that, they said it was too expensive. Yeah, and that was just a preposterous outcome. And anyway, eventually we'll buy the right product, but we'll do it after years of wasting money on something that shouldn't be painful.
Well, hopefully that contract will come up for renewal fairly soon, but we'll have to have a look at it, I suppose. Okay, let's move to another one. We've got specialist semiconductor manufacturer, EnSilica. they've obviously, it's quite a tough area in chip manufacturing at the moment. If you're in AI like Nvidia, you're having a riot, but everywhere else, automotive, industrial, PCs, smartphones, everything else is struggling a bit. How do you see these guys, first of all, placed in the sort of chip manufacturing? I guess they're really specialist and niche, and then sort of like, just general sort of prospects.
Yeah, so EnSilica is an ASIC designer, so it doesn't do the manufacturing itself.
Yeah,
which sadly we don't do very much chip manufacturing in the UK. But that's a whole other story. We do some, but not enough. And EnSilica is one of the most important UK chip businesses, and they're clearly very good at what they do. They've been, even though you'd never know it from the share price, they've been winning a lot of really interesting business in what is also a competitive world market. And I suppose the reason why the stock market hasn't embraced it, well, the reason it didn't embrace it initially is they didn't raise enough money when they floated. They floated with debt. And then the kinds of contracts they were winning were quite working capital intensive up front, because you go through this design phase and you're really after the revenues when the thing goes into production, the royalties when it goes into production. But then that takes several years. So it became a bit of a jam tomorrow story, even though the revenue in the future was just growing and growing. The market was just saying, well, that's all well and good, but where's your cash? And they raised money 2 or 3 times since they came. We think they have done 2 things. They've raised what they need, but also they're now winning the kinds of contracts which don't impose the same working capital requirements early on, and that's much better for them. So actually, we think it's a really interesting company. Market's absolutely not appreciating the quality of this business. Definitely deserves a much more favourable view from the market than it's received. And I think it's a matter of we're just waiting for that kind of turning point you get when it becomes obvious that the company is now overall the humps generating cash is going to be a key moment for this business. And the kinds of contracts it's announced recently, where they're not just big working capital drawdowns initially, that should turn the fortunes around here.
It trades on about 9 times PE, so the market obviously is a bit hesitant about whether it is going to raise some more money, I guess, would be the but if they don't, then that's good. Okay, another one which has raised some money recently and is a world leader with a huge order book, but has disappointed in the past, is SRT Marine, which is all things sort of like shipping and marine surveillance and tracking for sort of like coast guards and security of borders and all this sort of stuff, maybe to prevent sort of drug running, but also safety and stuff like this. How do you see this one? It does seem to have just reached a tipping point of significant revenue growth and profitability at the PBT level.
Yeah, I mean, this is in a fantastically interesting position, but I've lost count of the number of times when I've said, "Oh, this is SRT's year. It's going to be now." And Simon, who's run it, has this incredible infectious enthusiasm, a bit like you, Paul, which is great. And he's carried everyone with him through, what has been just an unbelievably long period of commercialization. But to his credit, he's built phenomenally interesting technology business. They really dominate the world of AIS electronics, and they broaden that out to being a much broader maritime domain awareness business. Just signed a more than $200 million contract with a Middle Eastern country who were in a mad rush to get it. Whereas mostly countries are, they say they want this and 3 years later you get it, and that was SRT's problem for a long time. Suddenly one comes along who wants it tomorrow. Okay, and sadly, they did manage to kind of clutch a bit of defeat out of the jaws of victory last year when this incredible contract came along, and then the country was in such a rush that they didn't have time to finance properly the bond that they needed to put up at the beginning of this contract. And astonishingly, I'm still a little bit perplexed by this, but the customer simply wouldn't wait for them and said, well, if you don't have this bond ready on Monday, then we're going somewhere else. But you kind of think, well, could they really go somewhere else? Nobody else really does this the way SRT does. Anyway, so they had to go to their biggest shareholder to get a bond at a very, very short notice, and they paid an extremely high price for it. which is irritating.
Yeah.
And that was quite a setback. And what should have, the shares would have already been £1 probably now if that hadn't happened.
Yeah.
But nonetheless, even that, this company will get over that, and it's got a really very interesting opportunity in the next few years. So great one to have in the VC.
Yeah, no, it does seem to, if they can deliver on those orders and convert that into revenue, then get recurring revenue off the back of it, it should be a massively bigger business generating good margins going forward. But I guess, as you say, it's been a few years that people have been slightly sort of like disappointed. So it takes patience. Okay, let's dive straight into subsea marine rental equipment for offshore energy, so oil and gas and offshore wind. Let's go to Ashtead Technology, which again has done really well. I think it got listed probably about 3 or 4 years ago. It's sold off a bit on sort of like fears of North Sea, etc. But they're split between oil and gas and offshore. And I think they're actually moving outside of the North Sea as well, some of their subsea sort of marine rental equipment, all things expert in that area.
I mean, that's understating it, Paul. Ashtead Technology is a very international business.
Yeah.
It does have an Aberdeen headquarters.
Yeah.
But, they can rent their equipment anywhere in the world. And, one of the questions we've asked them is, is there fungibility between, you've got some equipment in Aberdeen, can you just ship it to another country if the government decides to shut down the North Sea, which they kind of have done, unfortunately? And the answer is yes, absolutely. So this is a very international business. It's not dependent on the North Sea. The fortunes of the North Sea, and it shows the fact that it serves both the oil and gas markets and the offshore wind markets puts them in just a very strong position, because those two markets are highly complementary. Obviously, they're both energy markets, but we need both. Not everyone agrees we need oil and gas. I wish we didn't, but sadly we do, because we're still using an absolute ton of it in the UK and everywhere else. Hopefully we won't need it forever, but for the next 30 years, we absolutely have no alternatives. So, this is these are strong markets, and the ambitions in the UK for offshore wind and other countries as well are massive. What could derail the offshore wind industry? Well, a few things. There's always the risk that when you industrialize the ocean at that kind of pace, that you come across some problems you hadn't expected, and maybe then it's possible people start thinking, actually, we've done too much. I don't know. Who knows what comes along with these things? But it looks set for a lot of growth and expansion. The wind industry in general in the States is very strong. So we really like it, and it's a very well run company. It checks out very well. If you take sort of industry references on the company, they're very good. It's got a good reputation for what they do. So I think it's a really nice situation, and it has sold off a lot. So hopefully a good opportunity there.
Yeah, no, I mean, it's only 12 times PE, sort of. What is it? EBITDA, about 8 times EBITDA, and if it's got a good growth, then that's a really good price. Just on that, in the North Sea, we've got Serica Energy, which is basically, probably one of the biggest producers actually of oil and gas there. And I was looking at its actual multiple, and I know the government wants to wreck the North Sea oil and gas for whatever reason. I'm not sure, but they seem to be doing a good job of it. But I was looking at the PE, and it trades at about 4 times PE. And it's generating a shed load of cash at the moment. And I'm guessing it wants to sort of because it's got some, I don't know, is it tax losses or something like that? So it's managing to sort of consolidate and generate. Anyway, how do you see it? Just looks too cheap.
Well, I absolutely agree with that. It does look too cheap. I mean, it's one where, the market has so little confidence in the future of the North Sea that it's just assuming that the market cap should be the kind of cash you can see coming out, even with all the worst of the tax regimes, and you give it no credit for anything beyond the next sort of 4 or 5 years, and you see what the answer is, and you get to the kind of current share price. Will Serica still be producing oil and gas in 2040? Yeah, probably. and those. But you need to be able to carry on investing in these fields, and this is really where, obviously the government doesn't say that it wants to shut down the North Sea, and it doesn't think it is shutting down the North Sea. But the problem is the North Sea is shutting down.
Yeah.
So, and we were chatting to Hunting the other day, and
yes,
and they're closing down a £10 million cost base. Probably, well, they say it's in Europe, but it's probably going to be in Aberdeen. I don't know. And I was saying to him, well, when you shut these things down, and if somebody comes along later and says, well, actually, we want to get this all going again because we realise we need an oil and gas industry, and we're just shipping the stuff in from overseas, and it's a disaster for the environment. The answer is no. You can't start this up easily again at all, because Aberdeen was this incredible asset in terms of a skill set and industry, and because I think very few people outside of Aberdeen understood it, it's been shut down and nobody's protested about it. Quite the opposite. People are protesting because they want it shut down, and they just don't understand the consequences of that. They somehow think that's going to be good for the environment, which it isn't. It's quite the opposite. It's bad for the environment. So it's a bit of a tragedy going on there, and I guess Serica's caught up in that, but the tide will turn, I think, because it's such madness that what we've done in Aberdeen. I think the tide will turn because we'll kind of come to our senses. And interestingly, the SNP here in Scotland, which a lot of the listeners won't follow, but a few years ago, under Nicola Sturgeon, she had the luxury of sort of jumping on the bandwagon, saying, "Oh yeah, of course we've got to shut down the oil and gas industry. This is the source of all the problems." Not refusing to understand. Actually, no, it's us who use the oil and gas. That's the problem. It's not the producers making it, because we'll just buy it from somewhere else if they don't.
Yeah.
And so she was saying, "Oh, Scotland should never give any more licenses. We should, and all that." And when the super taxes came along, they were massively in favour. But now, actually, interestingly, the John Swinney regime has really changed the rhetoric, quietly, not boldly, and sort of trying to change people's understanding of this, but starting to say, well, it doesn't really make any difference to the environment if we shut down the North Sea, and actually, don't we need this stuff? And isn't it terrible for Scottish business if we shut it down?
Yeah,
of course it is. So I had always wondered why the Scottish kind of political circuit didn't make this a massive issue, because it's hugely damaging to Scotland. But anyway, Serica fights on, and I'm hoping things will turn around so that Serica can start investing again. And of course, one of the spillover, maybe the barometer thing here will be Jersey Oil and Gas, which holds an asset that Serica farmed into, the Buchan field, which has a license. So this kind of isn't being denied permission to go ahead. But the thing that it needs is a counter to the crazy Supreme Court ruling, which said environmental assessments have to take account of level 3 carbon calculation. So in other words, not just the carbon you emit in the production, but the carbon that your customers use when they burn the oil and gas, which is, this is just kind of nonsense thinking. And apparently the Supreme Court judge who made that decision is incredibly bright. But this judgment, he got it so spectacularly, stupidly wrong. I mean, it's literally breathtaking. And it relied on it relied on a 2019 report written by the UN about the American gas industry, which is saying, well, if you shut down some American gas, you don't get an immediate shutdown of other gas. And importing. Well, America's not the UK North Sea. If we don't produce it in the North Sea, we will buy it from somewhere else. All of it.
Yeah.
The reduction in consumption is zero.
Yeah.
Anyway.
No, you're exactly right. I mean, the government is relatively inexperienced, to say the least, but the previous government wasn't much better at it. They made so many mistakes.
I mean, to be fair to them, they have acknowledged this is a problem, but they haven't yet announced how they're going to deal with it. But I think maybe it needs a bit of a clarification to the legislation. But at the moment, these things can't go ahead, actually, partly because of that ruling.
No, but when you look at the crown jewel industries within the UK, we've got the financial community in London, the defence, we've got a bit of technology, fintech, we have a bit of life sciences, and oil and gas. And if you decide it's right, I'm going to shut one down. I mean, those are your best parts of the country. They generate the most amount of jobs, the most amount of work.
Yeah.
It's like laying off your star striker. I mean, what are you doing that for?
It is, and actually, the thing that kind of really makes me kind of weep about this is that all that energy and the protests are going into the wrong thing. If you actually care about the environment, that is not the thing to protest about.
Yeah.
The thing to protest about is, a carbon tax, something that will make us users of this stuff pay for its burial and pay for the remediation. Because that's what will make a difference. And that has been. It's a small voice out there. Professor Dieter Helm is the main proponent of that. I think he's written with extraordinary insight on that. And that's how if you care about the environment, that's what you need to focus on, because that's what will start to remediate the problem. And it's not going to be it's not going to be it's not going to be shutting down our industry, because that's just going to benefit Russia, unfortunately.
Yeah, no, absolutely. It doesn't benefit us at all. Okay, let's switch to another sector, which we hardly ever talk about, but pretty popular, is precious metals, oil and gas. We've got Greatland Gold, which I think is a gold producer in West Australia. What sort of piqued your interest here? We've never discussed it.
Yeah, Greatland Gold. So for years they were developing an exploration asset in Western Australia. Not a place you or I will probably ever visit. It's middle of the desert, the scrub, the Australian scrub. And they had this. They had the interest of Newcrest, and Newcrest farmed into it and paid for a lot of it. Everyone thought the Newcrest is going to acquire this, and then Newcrest sold itself to Newmont. And the reason that Newcrest were going to acquire this asset was because they have a big mine there called the Telfer mine, which was running out of ore in a couple of years' time from now. And so the logical thing to do is you bring on another nearby asset, and you start feeding this massive processing plant that you've got. And I followed it and I thought, well, that's interesting, but we tend to only buy things when they're in production, so it's too early for us to take any interest in it. And then change of management at Greatland, and these very experienced Australian team joined, who'd basically done something similar to this before, taken an asset, turned it into a big producing asset by acquiring a mature mine nearby and feeding in the ore from the new asset. And actually what then emerged was the management team negotiated a really very attractive acquisition from Newmont of Newcrest's nearby mine called the Telfer mine, which is running out of ore. But actually, the mine hadn't been producing for something like a year. So all the ore they had been producing was being stockpiled because there was an issue with one of the tailings dams. So massive stockpiles of ore, and they were acquiring all of the equipment, all of the stockpiles, basically for about the value of the stockpiles. So they're essentially being given this mine, and they already have an interest not only in the asset they were exploring, but a number of other exploration assets nearby. So immediately Greatland Gold becomes really quite a significant producing gold company in a very gold-rich area of Australia with a great management team. So we just thought, actually, this is the kind of thing we like. So we took a position in that placing.
Good. And when will that new sort of mine they've bought come on stream? What, a couple of years' time, will it, or something?
A couple of years' time, and in the next 2 years they'll be producing from the Telfer mine. And there's a very good chance they'll find ways of extending the life of that mine in any case. So there's some interesting development zones in the Telfer mine, which so there's now a lot of options for the management team to pursue.
Okay, good. On that same area, we've got Hochschild Mining, which is a silver gold miner in Peru, I think, actually. What sort of, like, say, what's the investment thesis behind this one? Obviously, the silver and gold price have been doing pretty well of late. Essentially, there's a limited number of ways of investing in silver and gold in the London market for us. We can't buy the large caps, and Hochschild was traditionally more of a silver miner than the gold company. It's now more actually balanced between the two. They have a very high altitude mine in Peru called Immaculada, and their issue, the kind of quality of Hochschild and also its problem was that they never developed long reserve life, but they would always find stuff. So it's a very, very prolific area they were in.
But if you don't have a long reserve life, the market doesn't ever give you a high valuation. And also, their license terms are always very short term. So, and then there was a massive political upheaval in Peru, if you remember, and it looked like it'd be very mining unfriendly, and then that all changed, and a new lady came in to be president who was much more pragmatic and mining friendly, and eventually Hochschild signed this 20-year license for Immaculada, and that was, that is a really key turning point for the business, because that's, if you like, was their key cash generating long-term asset. And then they were planning a lot of money to a mine in Brazil, a gold mine, which goes through this hugely cash absorptive phase, is now in production. So Hochschild's gone from being, a kind of company with some debts, throwing a lot of money at a new mine, to one that's now highly cash flow positive. And we like gold, and we also really like silver. So George and Mark, who are our mining team, they like both, and George can talk much better than I can about the silver market, but it's very interesting, and looks like it's going to go into quite a long period of undersupply. So, and it's an industrial metal used in things like solar panels and other important industries, as well as being a precious metal. So I just think it's an interesting one to hold, and a lot of that political trouble in Peru is behind us.
Yeah. It only trades on 6 times PE, so it's not exactly cheap either. But the shares have done terrifically. For a stock that's got sort of like a sort of low life assets. Actually, the shares have done brilliantly. I wish I'd owned it in a year. I mean, that's almost like tripled.
Yeah, it's true. It's bounced right back, and I think it's had a not an uncheckered history.
Yeah.
And so but it's. Yeah, right now it seems to have be going in a good direction. They've got a succession issue with the founder, which seem to be on top of. But if you like silver, it's a good one to have a good look at.
Okay, we've got a follow-up question on from Ben Sharman, just final one, asking about Scottish TV, STV. I don't know if you hold that one, Paul, or have you got any update on it at all?
I don't particularly. I haven't caught up with him in a little while.
Yeah.
So I don't have any great insights into that, I'm afraid.
Yeah, no, I don't know. All I'd say, Ben, is I think the crown jewel is their studios and their backlog, and they've got a digital. I think there's sort of like an iPlayer equivalent out there in Scotland. So they have some really good assets, but you'd have to work it out on a sum of the parts. Right then, Paul, I've got a really tough final question for you.
Okay.
Looking into the Amati crystal ball, what's going to be your favourite sort of like Jourdan exciting stock for this year?
Oh, that's a really tough question. I should have thought.
Exactly, I know. Yeah.
Yes, I should have thought about that one in advance. I mean, I suppose that okay, if we segment this into the very small end, what could be? I mean, if you're willing to go really small and take quite a lot of risk, I'm one of our most recent purchases in the VCT is a company called Feedback, which is provides just a really interesting bit of technology to the NHS, and it's something that I think the NHS absolutely should buy, because if you get a chance to see a demo of this software, have a look at it, because if I was a doctor, I'd absolutely want to use. It's basically it's 98% of doctors in the UK use WhatsApp for clinical chats, which of course is illegal, but we put them in an invidious position because that's kind of the only way they can get their job done.
Yeah.
Feedback not only provides a much better version of that, so they can form groups and chat about things legally. They can bring in the whole patient record, but most importantly, they can see the GP's record, all of it. When hospital doctors can just look up the GP records, and they can coordinate with the GP and every other doctor involved in the patient's case, just kind of effortlessly. So it's like this is a move into the 21st century. It wouldn't be expensive for the NHS to adopt it. There's no real barrier to adoption. If it happens, it'll be fabulous for Feedback. It may not happen, of course, because the NHS is, as we were talking about earlier, is spectacularly bad at buying technology, so they may well not. But that's one. There's a lot of upside if it all happens, and what should happen does, may not. And at the bigger end, I'm still pretty keen on Alpha International Group.
Oh, okay.
Where I think they should be set for a pretty good year. And actually, the high interest rates are good for them. Higher for longer interest rates are good for them, because they they call it non-operating profit, but it's a massive amount of cash flow and profit that comes from interest income from the funds that they're helping to administer.
Yeah.
And
that's the international payments, isn't it? Forex international payments.
They do foreign exchange. Well, they do like treasury management services.
Yes, that's it.
Means, but they also have this new business, or newer business, which they call their international division, which is basically providing bank accounts to specialist funds, who are largely in offshore jurisdictions, and served by some of the big banks who don't specialize in that. But Alpha Group have really specialized in providing what those funds in those jurisdictions need. And of course, one of the things they need is completely dependable large payments. If you're you're acquiring a business for $300 million, you need to know that your payment's going to go on the day you want it to go, and you're not going to get a call from the bank's compliance department saying, "Oh, we've had a look at this and we need to ask you some more questions," or whatever. They just specialised in it, and they're getting good growth. They seem to be winning about 25% market share in that area. I think it's solid, and this should be.
Yeah, I'd agree.
It should be a good environment for them.
Yeah, and there's a bit of M&A, isn't there? Because Equals got bought out. Admittedly, they're a bit smaller, but and they're not quite the same as these guys. But there's definitely consolidation in that B2B Forex international payments, outsourced treasury stuff.
Yeah.
All right. Brilliant. Okay, well, thanks very much, Paul. As always, absolutely fascinating. Covered a lot of stocks that we never touch on at all. So, and it was also interesting hearing your thoughts on all the sort of the trials and tribulations potential of the of Trump and Ukraine and Gaza, and also the government and stuff. So, big thanks again, Paul, and big thanks obviously to the audience as well for your questions, and hopefully touching base in about 6 months' time.
Brilliant. Thanks, Paul. Thanks for having me on.